All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Tuesday, everybody. Today's January 7th, 2025. And the top story this morning is Tesla stock is in the news again. They just caught themselves a downgrade at Bank of America. And I guess the downgrade itself isn't really that big of news. This Tesla stock's down like 2% right now. It's not making a huge move. It was up yesterday. It's probably going to gain back these losses on whatever next hype story comes around. But the thing that really caught me in this analyst note from Bank of America was some of the things they were talking about valuation. And right away, I can tell I probably just lost half of you guys because Tesla and valuation, I realize we're not supposed to talk about valuations or fundamentals or actual businesses when we're talking about Tesla. It's always about the next big thing that's just over the hill. Trust me, I swear, eventually. But guys, Tesla's worth $1.3 trillion right now. It's a big company, obviously, valued more than all the other automakers around the world combined. And they're saying almost half of Tesla's valuation is because of the potential of robotaxis. And that kind of got me thinking. I'm like, all right, robotaxis, I get it. It could be a big thing, right? But robotaxis aren't here yet. It's a business that doesn't exist. And we're talking about a $1.3 trillion company that is currently deriving half of its valuation. So they're saying the robotaxi business at Tesla is worth somewhere to the tune of $650 billion for something that doesn't even work yet. I mean, yeah, Elon had his little event where he got in the robotaxi and it drove away. And look, these full self-drive concepts over at Tesla, they're incredible. I hear from people all the time about how great it is. It's a smooth ride. I see videos of people not touching their steering wheel and, you know, the car's driving itself. It's pretty amazing. But $650 billion? Guys, what are we doing here? I mean, maybe this is just a criticism of the market as a whole. A business that does not exist yet, has zero cash flow, is worth more than $500 billion. And, you know, case in point on the same kind of topic, Nvidia CEO Jensen Huang gave the keynote address at CES yesterday. People were waiting in line like Beetle fangirls to listen to Jensen speak. Of course, he donned his motorcycle jacket. And he starts talking and he gives this whole big speech, you know, imagine a world with 1 billion humanoid robots. Now, this is the Consumer Electronics Show. This is not San Diego Comic-Con. Imagine a future with 1 billion robots. That's a long way off. There are not 1 billion humanoid robots washing our dishes for us yet. That's not going to happen in the next 10, 20, probably not even in 50 years. These things can just now, with a bunch of wires hanging off their back, manage to navigate a half a flight of stairs. It's a long way from this whole iRobot thing that everybody thinks is like just around the corner. And we are assigning such obscene valuations to these things. At some point, people need to start asking, what am I actually buying and how much am I actually paying for what I'm buying? Sooner or later, it's going to matter. I realize right now it doesn't, but that day is coming. And if people are going to snap out of it, look down at the shares they're holding, what's the underlying business, and go, oh, crap. And it's all going to happen at the same time. Maybe this analyst note from Bank of America about Tesla is going to jar some of that loose. Also noticeably absent from Jensen Huang's speech at CES, he gave no updates on the delays at Blackwell. All right, the Blackwell is their next signature GPU. It was supposed to be mass market shipped in October. Here we are several months later, 4 months later, it still isn't shipping. The last we heard from Blackwell is they're overheating, and the problem is the server guys are just installing them wrong. They need to redesign their server racks. The problem isn't with Blackwell's chips. Does that have something to do possibly with Microsoft's decision yesterday to cancel a data center project in Wisconsin? I don't know. Remember, Microsoft said a few weeks ago that chip availability is no longer a problem. They're no longer GPU constrained. And then they came out and they kind of contradicted themselves and they said $80 billion in CapEx this year. Well, if you're no longer GPU constrained, what's with the $80 billion in CapEx? Okay. And then a day after the $80 billion in CapEx, they say, oh, by the way, we're going to stop. We're pausing construction on one of our data centers. So conflicting messaging coming from Microsoft, Nvidia tiptoeing around the subject, the press, of course, nobody asking any questions. Nvidia did unveil some new gaming GPUs that they're saying are based on some of the technology they've developed with AI. It's supposed to be faster. So they gave a little something to the gamers at CES there. Also, Nvidia-related news yesterday, Aurora Innovation has announced a partnership with Nvidia. Of course, they're going to develop driverless trucks together. Aurora stock is surging on this news. Apparently, driverless trucks are closer than we realize. Some 25 states have passed some form of regulation enabling, legalizing, or otherwise controlling the use of autonomous rigs on the roads. So Aurora stock surging on that news. Also, speaking of automation and transports, the port workers strike, the longshoremen and the port owners, they're talking again, possibly a breakthrough in progress, maybe not, but there's an article in CNBC this morning that they have drafted some language about automation and job creation elsewhere at the ports to offset that automation. So maybe there's a breakthrough here. That deadline for them to reach an agreement is just 8 days away here, January 15th. And that would be it. The port strike would come on. Look, if this does break down, if they don't come up with some kind of language on automation, then you would have the ports going on strike right as Mr. Orange takes office and the tariffs start coming in. So that's a story worth keeping an eye on. That could be something that jimmies inflation if we're not careful. And last but not least, we had the Fed's Vice Chair for Supervision of Banking, Michael Barr, stepped down from that role yesterday. Barr will be staying on as a member of the FOMC, or the Federal Open Market Committee, over at the Fed. And it is believed that this is a decision that he made because he thought President Trump was going to fire him. Now, you guys may recall there's been a lot of discussion at some of the FOMC meetings, especially after Trump was elected. Oh, can the president fire you? Can't he? And, Jay Powell's not allowed under the law comments. Well, that's true. The president can't fire a Fed chair or a Fed governor, but he does appoint the chairman and he does appoint the vice chair. And so he could have stripped Michael Barr from these titles, or he could have stripped these titles from him. And there was a story in Reuters a couple of weeks ago that he was consulting with his attorneys on what his options were. Long story short, the president can't fire a sitting member of the Fed, but he can take away their title of chair. And it looks like Barr is just getting rid of that title before the president has a chance to do so. That may have contributed to that move we saw in Bitcoin. Bitcoin's back above 100,000 this morning. It was as high as 102 last night. Michael Barr, I don't want to say he was outright hostile to crypto, although some of the crypto guys may say otherwise, but he certainly wasn't the most crypto-friendly of regulators. He was also a little tighter on bank capital requirements, and deregulation of banks is probably going to be one of the things Trump goes after right away. Try to loosen up credit expansion to keep the liquidity flowing in markets, because we got to keep that stock market inflating no matter what. So that's probably got something to do with why he stepped down. Why don't we shrink my big melon of a head and let's see what's going on in this market this morning? And don't forget that like button and the subscribe button right next to it so you can come have your coffee with the melon heads. We do this one every morning. S&P right now is up 17 points, about 0.25% higher once again ahead of the opening bell. The Dow is up 117 points, also a little more than 0.25% higher ahead of the open. And the NASDAQ is up 0.2%, 40 points to the upside ahead of the open. So stocks are up pretty much across the board, albeit a small amount. The U.S. dollar is pretty much flat here. It looks like we finally settled down. Yesterday's live stream was kind of a it was nutty. All right, right in the middle of the live stream, we were talking about that story about how Trump was going to do more targeted tariffs based on that Washington Post article, and the dollar, was falling sharply. And then all of a sudden, Trump, like right in the middle of my stream, comes out and says, no, the Washington Post article was fake news. The dollar rallied right away. So I kind of had to pivot right in the middle of the live stream, and that was a lot of fun. Right now, though, the dollar settled down here at 108.21, down 3 basis points this morning. We got a mixed bag in the bond market. The 30-year Treasury, 4.862. That is up 2.5 basis points. The 10 years at 4.631. That's up 1.5. The 2 years at 4.266, down 0.5 point. And the 1 month is down 0.5 point at 4.310. Looking over at commodities, we've got a lot of green here this morning. We've got spot gold is up by almost $25, about 1% higher, $2,660 for spot gold. My favorite of the shiny silver at $30.32. That's up about 38 cents or 1.25% this morning. Copper is up 1%. Platinum is up 3%. Palladium's up 1% and change. And WTI crude is 0.5% higher, 73.97. That's up about 41 cents this morning. Also, we've got Bitcoin. It's showing in the red here. It's up versus where we were yesterday. We're currently at $100,595 is priced on Coinbase. That's down about $1,600 off of yesterday's high. Yesterday, we did go as high as 102,500, giving back some of those gains now, but still above that 100,000 threshold. Now let's talk about the main story this morning. Tesla stock drops as BofA cuts rating on high execution risk and valuation. Now, I'll be honest with you, the title is kind of negative here, high execution risk valuation, but the entire article is positive spin on Tesla. This is like the softest downgrade I've ever seen. Let's see. Tesla shares fell around 2% in pre-market trading Tuesday after Bank of America analysts downgraded the stock from neutral to buy, while the bank raised its price target on the stock to $490 from $400. Analysts caution that execution risk is high and Tesla is trading at a level that captures much of our base case long-term potential from core autos, Robotaxi, Optimus, and energy generation and storage. All right, like the first thing I got to notice here is this is a downgrade. All right, we're downgrading the stock, but we're raising our price target by almost 20%. So that's a heck of a downgrade where you raise your price target. Again, even the bears in the mainstream don't know how to do this right. Like this is when you're raising your price target, some might call that an upgrade. I'm just throwing it out there. According to analysts led by John Murphy, Tesla's Robotaxi service offers the largest opportunity for the automaker, now accounting for roughly 50% of its valuation. And that is just amazing to me. 50% of its valuation. Now, I get it. Robotaxi's it's got a lot of potential there, guys. But 50% of its valuation, it's a $1.3 trillion company. That means Tesla's Robotaxi business, which, again, there's no functioning Robotaxis operating anywhere in the country right now, valued at somewhere around $650 billion. That's like 4 Ubers. All right, that's what we're valuing. If they're saying 50% of Tesla's valuation is based on the potential of this Robotaxi, all right, this business that doesn't yet exist is currently worth 4 Ubers, 4 of the entirety of Uber. Maybe we ran a little bit with this one. Like, I get it. Elon is a heck of a salesman and, X service, I'm sure pumps the stock and everything. Tesla bros are very passionate about their company. I'm sure I'm going to hear from them in the comments today. But maybe we took this one a little too far, too fast. Maybe it's going to be a while before the Robotaxi gets up to this level where it might actually be worth that much. I'm just throwing it out there, guys. You do what you want, because if you strip that away, you're left with a car company that delivered fewer cars last year. And a lot of those cars that they delivered are still sitting in dealer lots that haven't been sold. So, hey, maybe we want to take a hard look at what we're actually getting here, guys. I just throw them out there. While the Robotaxi launch is expected to start slowly and feature elevated per mile costs, Tesla's long-term cost advantage over rideshare competitors like Uber and Lyft is expected to be substantial given the lack of a driver. So I guess once they do get that business up and running, it is going to be very profitable because you're not going to have to share the money you make with the guy driving the car. I get that. There's also going to be other costs that that Uber doesn't have to deal with. Anyways, guys, Tesla stock barely reacting here, down 1.9%. If we refresh this, it's probably positive by now. Okay, down 1.8%, not really moving off of this downgrade. And again, it's only a downgrade in name only because most of the note was positive. It's just saying, hey, Tesla might have trouble delivering on some of these things, but doing pretty well otherwise. Now, we've got, speaking of valuations, Nvidia unveils gaming chips desktop PC to protect AI lead. The chipmaker CEO pitches tools for accelerating AI adoption, and Nvidia updates its lineup in a bid to spread to AI cars and robots. Nvidia Corp Chief Executive Jensen Huang announced a raft of new chips, software, and services aiming to stay at the forefront of artificial intelligence computing. Huang took to the stage at a packed arena in Las Vegas to kick off the CES trade show on Monday and present the new lineup, offering a vision for how AI will spread throughout the economy. The company wants its products to be at the heart of a future tech world with 1 billion humanoid robots, 10 million automated factories, and 1.5 billion self-driving cars and trucks. And I think we need to use our the voice of the guy from the movie trailers. You know, that same guy, I forget what his name is, but he does the voice of every trailer. You know, this isn't an investor conference. This isn't a consumer show. This is a pitch for a movie for a future that doesn't exist. In a world with 1 billion humanoid robots, 10 million automated factories, and 1.5 billion self-driving cars, one man stood out among the rest. One man in a black leather jacket. That's right. That is Jensen Huang's sci-fi presentation at CES. Again, made no mention whatsoever of the delays in Blackwell, which is probably the single most important issue facing the company right now. This next generation of AI GPUs, what is going on with them? The company's been very dodgy about that. Now, here's some of what they did talk about. These new GeForce 50 series cards. This is more like personal computing for gamers at home, by the way. Will take advantage of Blackwell's capabilities to create even more realistic experiences for computer gamers. The company said that the traditional graphics chips build an image by calculating the shade of each pixel in the picture. The new technology will lean more heavily on AI to anticipate what the next frame should look like. That would theoretically free up a lot of computing power and make them more powerful. GeForce allowed AI to reach the masses, and now AI is coming home to GeForce, Huang said during the presentation. The flagship RTX 5090 model will be available later this month for $2,000, with less powerful cards following later. The RTX 5070, costing $549, will debut in February with better performance than the prior range's top model, the RTX 4090. Now, guys, gaming is such a small percentage right now of NVIDIA's revenue. It's almost an afterthought here, but they did unveil some new products. NVIDIA stock is up 2.5% just because number go up. And we got some more NVIDIA news here. Aurora innovation stock rockets 44% after entering a partnership with NVIDIA and Continental in self-driving trucks. NVIDIA's Drive Thor system on a chip will be integrated into the Aurora driver. Shares of Aurora Innovation rocketed 44% early Tuesday after the maker of autonomous trucking technology announced a partnership with AI market leader NVIDIA and tire maker and parts supplier Continental. The three are teaming up to deliver driverless trucks at scale using NVIDIA's next-generation Drive Thor system on a chip, which will be integrated in the Aurora driver and SAE L4 autonomous driving system that Continental is planning to mass manufacture starting in 2027. This isn't that far off, apparently. The company will test prototypes of the future hardware in the coming months. Delivering one driverless truck will be monumental. Deploying thousands will change the way we live, said Chris Urmson, CEO and co-founder of Pittsburgh-based Aurora, in prepared remarks. Aurora is currently in the last stages of validating the Aurora driver to driverless operations on public roads. The truck is outfitted with 25 laser, radar, and camera sensors and is expected to start hauling freight on I-45 between the Dallas and Houston areas within 20 driverless trucks in the near term, as the Associated Press reported. So this is closer than a lot of people realize, apparently. They're saying, when is this? By middle of this year, apparently. They're going to start running some of these things. Aurora stock up 41% on this news. $9.19. That's up $2.69. A good day for shareholders of Aurora. Speaking of automation, the ILA union and port owners held a secret meeting on automation as new strike looms. Remember that topic from the fall? It's still out there, guys. We could still see a port shutdown. A secret meeting between key members of the International Longshoremen's Association and the United States Maritime Alliance was held on Sunday in an effort to help the dock workers union and ports ownership find common ground on the heated issue of automation and semi-automation. A document produced out of the meeting indicates a focus on the creation of new human jobs to complement any new port technology. CNBC has learned that the 8-hour meeting took place ahead of the highly anticipated resumption of formal bargaining and with a January 15th deadline to avoid a new strike by dock workers. According to sources close to the talks, who were granted anonymity due to the sensitive nature of the negotiations, language on automation was drawn up to assist full bargaining committee review process slated for Tuesday. But the sources added that the language could lead to new concerns about added labor costs and new risks to getting a comprehensive deal on wages and automation completed. Now, the ILA and the dock workers, the ILA is the dock workers. The ILA and the port owners reached a deal on wages back in the fall. It was supposed to be something like a 60% raise. Now they're talking about, all right, we're going to automate the ports, but we're going to give you guys other jobs elsewhere. No word on what those jobs would be. Well, does that mean that 60% raise that they already agreed on? Is that back on the table? Is this potentially going to change that? It sounds like there's some concerns about what that means for pay. But at the very least, they're talking. We got 8 days before this strike goes back into effect. So hopefully they're able to get something done between now and then. Now we got this one here on the Fed. Michael Barr to step down as the Fed's head of banking supervision to avoid the clash with Trump. Let's just keep this simple, guys, and we'll do this one kind of quick. Trump can't fire him. He's still going to be a Fed governor. He's still going to be on the FOMC. He's just not going to be the vice chair for banking supervision anymore. That's going to be somebody else. The Federal Reserve's top banking regulator will be stepping down next month, paving the way for President-elect Donald Trump to name a replacement and heading off a potential confrontation between the two. Michael Barr's resignation from the position, which is formally called the vice chair for supervision, takes effect as of February 28th, though he will stay on as a governor on the Fed board. His term as Fed governor will last until 2026. There had been speculation that Trump might seek to replace Barr after he takes office on January 20th. The announcement will ease the transition amid speculation that the new president wants someone who is more bank-friendly to take that role. I would add more bank-friendly and more crypto-friendly. I think this story probably played a role in that move in Bitcoin we saw yesterday. Also, going across the pond, here's one worth keeping an eye on. German Statistics Office corrects December inflation figure to 2.8%. Now, this is kind of interesting. They're saying they're correcting the inflation figure. There wasn't a lot of language in here to describe why the correction. Most of the language focuses on why inflation is rising. I don't know, did they make some kind of change to their methodology? Was there some kind of error in a prior report? The language in the title is a little kind of like drops the hint of maybe there's been some kind of change going on here. Corrects December inflation figure to 2.8%. German inflation jumped to a higher than expected 2.8% in December. German Statistics Office, the status said in its first reading since the country's government was dissolved late last month. And there's another kind of hint in there. Okay, the government was resolved last month or dissolved. We have new people in charge, and now we are correcting the inflation statistics. They're planting the seed of political influence here is kind of what they're suggesting here. The preliminary print of the country's consumer price index is harmonized across the European area or the euro area for comparability. It compares with a 2.6% forecast from analysts polled by Reuters, so this is higher than expected. The harmonized CPI rose 0.7% on a monthly basis. That's a big jump in inflation. December marked the third consecutive month in which German inflation was back above the European Central Bank's 2% target. The indicator fell to 1.8% in September, then jumped back to 2.4% in October, and was unchanged at that level in November. So-called core inflation, which strips out food and energy costs, inched higher to 3.1% in December from 3% in the previous month. Services inflation also nudged higher, coming in at 4.1% compared to 4% in November. So we're seeing this core inflation. That's a little concerning because core inflation, that's that stickiness. That's, it's not higher oil prices. It's not higher food prices. It's not commodity related. You're seeing the price of general products go up. I think labor is probably a big input into that. People are demanding higher wages. It's having inflationary effects elsewhere in the economy. But we're seeing the same thing in the U.S. A lot of our inflation now, they used to just be like, oh, it was Putin's inflation because of the invasion in Ukraine. That's why we had all the inflation in 2022. Well, now it's in core inflation. It's not energy and commodities driven. So it's a little hard to just kind of wash that away as, oh, it's something going on in the commodities market. Last story of the day, Getty Images and Shutterstock gear up for AI challenge with a $3.7 billion merger. I kind of got vibes of the whole Sirius XM merger when I saw this one. Two companies that are struggling to stay relevant as image generating software becomes more and more prevalent. Getty Images said on Tuesday it would merge with rival Shutterstock to create a $3.7 billion stock image powerhouse geared for the artificial intelligence era in a deal that would likely draw antitrust scrutiny. The move comes at a time when the licensed visual content industry is facing threats from generative AI tools such as Midjourney and OpenAI's DALL-E, which can generate images and video in response to a simple text prompt from users. Now, right now, these image generators, they're pretty easy to spot. The people always have like missing fingers or mushy faces, but they are getting better. So with time, as AI image generators get better and better, there's going to be less and less reason to go pay Getty Images or Shutterstock to use one of their images in your content when you can just have Meta.ai make the image for you. So I'm not too surprised to see this merger. They may run into antitrust scrutiny, they're saying, but again, I don't think these businesses in their current form are still going to be around for much longer at the rate AI image generators are moving. And I just want to say thank you so much to Armando Reyes, who says, in the future, the body will be obsolete. No more sex. I hope not. Are we talking the whole, the Demolition Man helmets thing? You guys remember that? I don't know. How about the old-fashioned way? I just throw them out there. It's a family show. Maybe I should move on from this topic, Armando. I don't know. I'm going to get myself in trouble. Thank you very much, Armando, for supporting the channel, sir. Dean D says, West Hollywood has a ton of Robotaxis Ubering folks. Are they already in commercial operation? That's interesting. So they're already running. Now, okay, they're already up and running. And let's say, hypothetically, this Robotaxi industry were to grow 100-fold in the next 6 months. Would it still be worth $650 billion? Is it still justified the valuation? How much revenue, how much income, dare I say profits, because I don't think the Robotaxis are going to be profitable when they first roll out. They're probably going to be losing money. Eventually, they'll reach profitability, right? But how much does that profit have to become to really justify a $650 billion valuation? Or maybe we're just bidding up the next big thing again. Have we already moved on from AI? Is Robotaxis the new next best thing? I thought it was going to be quantum computing. Anyways, they're probably closer than we realize, already operating in West Hollywood. Thank you for that data point, Dean. Also, the automated trucks apparently are closer than we realized. They're going to start running in Texas pretty soon. So maybe this is just a future that's not so distant. I just think they're paying too much for it already. That's all. Thank you very much, Dean, for supporting the channel. Thank you for Charles G. Says, did you hear the U.S. added Tencent to the Chinese military blacklist? Rest in peace to everything gaming Tencent has money in. Tencent stock dropped like 10%. I did see that story yesterday. That's that tit for tat back and forth between China and the U.S. China it was last week. I didn't cover it, but China added a whole bunch of U.S. defense contractors to their list of blacklisted countries. And they're like, oh, yeah, well, you're going to put our companies on your list. We're going to put your companies on our list. Get used to this. We're going to see a lot more of this back and forth. Trade relations between the two countries are breaking down. The world is deglobalizing. I don't follow Tencent that closely. China tech is not something I'm particularly interested in. I don't really like our tech companies, and I don't really like China. And so China tech companies, it's like a Voltron of things that irritate Jack. So, yeah, I steer clear of those, generally speaking. But, yeah, not good for Tencent's underlying business. I echo that sentiment, Charles. Thank you, sir, for supporting the channel. T.A. Chapman says, hope in one hand, shit in the other, and see which one fills up first. Billy Bob Thornton from Landman. Tell me you've been watching Landman without actually telling me, T.A. Great show, and I love that saying, Tesla, Oklo, Nvidia. The Oklo stuff, I've talked about Nvidia on the channel at great length. I've talked about Tesla. At least Tesla has products and sales and profits. This Oklo company, man, I've been going back and forth with a couple of these Oklo bulls. People are like, oh, well, their CEO is now going to be the head of the Department of Energy. I'm like, that's great. I get it. And maybe they can get grants from the DOE, assuming the country just sits back while a guy awards grants from his department to his own company. Maybe he's able to do that. But the Nuclear Regulatory Commission has not approved Oklo's reactor. They have explicitly rejected it. And they rejected it, citing deficiencies in their safety systems. It was pretty rough language. And the Nuclear Regulatory Commission is an independent regulatory agency. They are not part of the DOE. They don't answer to the president. They don't answer really to anybody. It takes an act of Congress to fire a sitting NRC commissioner. All right. So the point is, the incoming administration and this new guy at the DOE, and it doesn't matter. The NRC has a 1,200-page regulatory framework for small modular reactors. They're not going to change it. It is so much red tape. And the most expensive thing in nuclear power is compliance, is red tape. It's not the fuel. It's not the operation and maintenance. It's all of the damn paperwork. Guys, I spent 15 years swimming in this stuff. The regulatory framework in commercial nuclear power is a libertarian's worst nightmare. Trust me. And all these people who are like, oh, it's essentially the same as this experimental reactor that was built in the 1960s. The nuclear industry just does not operate on that wavelength. You have to experience it to understand just how thick and heavy the red tape is in this industry. And Oklo is just not going to have a reactor built in the next 2 years. It will not happen. It's not even up for debate. Oklo's management knows this, and Oklo's management is still pumping out this will have a reactor built and running by 2027, which in my opinion tells me Oklo's management are liars, and it makes me wonder what else are they lying about, and that's why I am staying the hell away from companies like that. If you're into SMRs and you're into technology, a company like NewScale, they've at least got design certification from the NRC. They're not currently planning on building any reactors. The one they were planning on building, they canceled due to cost overruns, but they at least got approval from the NRC on their design. They are light years ahead of Oklo. By the way, I have no position in any of these companies I'm talking about. This is just my relatively well-informed opinion on nuclear energy. Again, all these people that are arguing with me about how I just don't understand the technology. Like, guys, one person in this conversation has actually had their hands on a nuclear reactor before, and it ain't you. So I do kind of understand a little bit what I'm talking about here. Thank you, T.A. Chapman. I appreciate that. And Spade Espada. Did I say that right? Thank you, Spade Espada. Eric Estrada. Silver's highest price ever was $49.45 in January of 1980. That was during peak Hunt Bros. $141.80 inflation adjusted. Today, 30 to 31. 45 years, how and why. The reason why silver went so high in the 1980s is because the Hunt brothers cornered the market for silver. The Hunt brothers realized that silver was overextended, and they levered up. They borrowed a whole bunch of money, and they just bid up the price of futures way, way higher for silver, to the point where they own more futures contracts than basically all the silver in the world. And so all the people who had sold them the contracts had to go source the physical silver. It was basically a silver squeeze, and they weren't able to find enough silver in order to satisfy all the contracts that the Hunt brothers were holding. The problem is the regulators got involved and said, Hunt brothers, you can't do that. And they put position limits and margin limits on there. They basically forced the Hunt brothers. They stop-lossed them. They forced them out, and the Hunt brothers got wiped out. And they rigged the market against the Hunt brothers. And that's why we haven't seen those 1980 levels ever since. As much as the price of metal was probably artificially low back then, the Hunt brothers took it artificially high. And that's why that 1980s price, when people make comparisons to 1980, it doesn't really work. That was a massive dislocation in markets. Now, if you want to compare that to what we saw in 2011, where we got pretty close, I would say that's an accurate comparison, because that wasn't driven as much by anything like the Hunt brothers. That was a little more realistic, but we still haven't seen those prices either, to your point, Spade Espada. I do think silver is undervalued, and that's why I continuously take little nibbles at my favorite of the shiny. I got to flash my little 10-ounce bar. I like the shiny. Thank you, Mr. Spade, sir. Thank you, Brojo, who says silver hit 50 is like waiting for the second coming of Jesus. It is. I wish we would have seen it. I wish we were already at 50. I'm sick of waiting for it. But you know what, guys? The market is giving you a discount. I do think silver is really undervalued. I think inflation is coming back. I think all the underlying problems in market and the Zerp and Burr mentality that drives all of it is still alive and well, despite the inflation that has battered the American consumer and anybody around the world for the last couple of years. And that's why I think silver and gold are still going higher in the long run. So, yeah, it's not at 50. You can be bummed out that the price hasn't gone there yet, or you can be happy that the market insists on giving you a discount. That's my optimistic appraisal of the situation, Brojo. Thank you for supporting the channel, and thank you, Tanisha, for the super sticker as well, who says, get up. Says, what is that? Is that a hippo saying get up? What's that baby hippo that's going crazy on Twitter? The moo? Is that a moo? I don't know. But thank you, Tanisha. I appreciate the super chat and the support of the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. Thank you again to my Patreon supporters and magnanimous Melonheads for everything you guys do for the channel. Links down below, should you feel so inclined. Thank you also for the generosity in the Super Chats, guys. I appreciate that very much. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big. Oh, and don't forget that like button on the way out.